Hello everyone, I'm Parizad Sirwalla, Country Leader for Global Mobility Services Tax, KPMG in India. Well, the month of Feb generally starts with a lot of anticipation, particularly around the tax proposals. Generally, the common man waits for personal tax provisions which give some disposable income in the hands of individual taxpayers. Budget 2022 has found its way already. When you read the fine print, not many changes from a personal tax perspective, more or less on the lines of what this government has always been stating, that they want to move to a clutter-free, simplified personal tax regime. So no changes in slabs or exemptions or income tax rates in this year's budget 2022. A welcome provision was capping the surcharge at the rate of 15% on long-term capital gains. This was the long-standing demand of the industry to bring parity between the tax treatment of unlisted shares and listed shares. So now long-term capital gains surcharge is capped at 15% for all assets. Even your property transactions, unlisted shares, everything is going to be, surcharge is going to be capped at 15%. Depending on the income slab you fall into. So for people who are in the 2 to 5 crores and above income slab, they should see some reduction in the long-term capital gains tax liability on account of this change. Another important element is the scheme around updated tax returns. So for individuals who have omitted, to disclose certain items of income in their return, there is this scheme almost on the lines of voluntary disclosure where you can file your, updated return. Of course, subject to payment of certain taxes and only in certain conditions if you have missed out reporting on the income. Somewhere also this is in line with, the government is definitely looking at financial transactions of individuals. The annual information summary and the tax information summary was already introduced last year. And therefore, the provision around updated return has been introduced in this year within a particular time frame. The other important change, if you are, investing in virtual digital assets, there is a new tax treatment where the finance minister said that she wants to provide clarity around taxation of digital assets. There is a very wide definition included in the budget 2022 on what virtual digital assets are. There are a lot of nuances around this, but the intention is to tax the income on transfer of VDA, virtual digital assets, at the rate of 30%. All in all, these were the changes from a personal tax perspective. And as I said before, of course, keeping in mind the fiscal deficit and the future, the stated intent of the government is to move to a simplified tax regime, devoid of any exceptions. That's it from a personal tax perspective. Stay tuned for more updates. Thank you.